Take a look at this chart. It's the Nifty Futures recent intraday chart and it's basically moving in a downward direction. If I ask you to predict the possible market direction for tomorrow based on this information, most of us in most of the time would likely to anticipate a continuation of this downward direction and we expect market to fall. But in reality, this is what happened. A complete trend reversal. The real question is, how can we identify such reversals or strength of the trend or even beginning of the trend in the earlier stages? That's exactly where the concept of volume profile comes in. And that's exactly what I want to discuss in this video. Basically, I'm going to divide this tutorial into 3 different sections. In the first section, I will explain the core principles of volume profile, including how it is calculated and its functions. Basically, I will also show you how we can effectively use this information on the chart. And in the second section, I will explore the various use cases of volume profile, basically how to interpret the information of volume profile in terms of the intraday section. And the third section is particularly crucial because I'm going to discuss about different trading setups using this powerful tool for intraday. Before I proceed, I would like to inform that recently I have published a book called Mastermind of Day Trading, which basically focuses on the rule-based concepts of market profile and price action trading. If you are looking for a comprehensive guide to enhance your intraday trading journey, consider adding this book to your collection. Link is in the description. It is now available on Amazon and Flipkart. And additionally, I have started posting real-time intraday alerts of Nifty and Bank Nifty on my Telegram channel. If you don't want to miss that, the link is in the description. Feel free to join. So let's get started. Well, let's start our video by understanding the core principle of the market. Basically, we need to ask this question in the beginning itself. Why do market exist? Because this very one question is completely linked to the concepts of volume profile. See, on a surface level, we can think that market is there for trading or maybe speculation, all those stuffs. But inherently, the primary purpose of financial market, any financial market, is to facilitate trading between buyers and sellers. Basically, market does it by moving prices up and down or basically advertising price up and down to discover where the most trades can happen. I know this is too theoretical. Let's try to understand this phenomena using the real life example. Suppose you are a big fan of instant coffee like me, and usually we buy it from a local grocery store. This is the context. And if suddenly, because of some reason, suddenly the price of instant coffee increases. So if the increased price is, you think it is too high, in that particular case, you may avoid buying it from that grocer. Like you, many people are not buying that coffee. Obviously, it means what? The demand has dropped. When that happens, the grocer might lower the prices to a point where people can again start buying it again. But all in all, in context, the price of the coffee falls here. That is an important point. But here is where it gets very interesting. When the price is lower and you find it attractive at that moment, instead of normal buy, you are going to buy more quantities of the instant coffee. That's the natural phenomena of any human being. So when many people think to buy the coffee at the lower prices, immediately the inventory of instant coffee reduces with the grocer quickly. When this happens, to manage this increased demand with a limited supply, basically the grocer increases the price. Overall, in context, in search of the value, in search of the right value, through this example, we can easily understand that there are two different extremes, higher extreme, lower extreme, and ultimately the value, or what we call it as a fair price, will be established between these two extremes. So if you understand this example, let's try to understand how the market works with respect to the same principle. Assume market as a balanced scale. I hope you remember this seesaw play, right? So basically it's a balanced scale where both buyers and sellers are really happy with the present play. So up and down is happening, but at the same time, overall, they are happy with the present prices of the market. Technically, this means that there is a complete balance between the demand and supply. However, one fine day, unexpected news comes into the market. So basically, these events could be anything. It could be financial news, government budgets, or company results. Anything that affects that particular instrument can be considered as a news or event. Basically, when something significant happens, when events happens, it can lead to an imbalance where either supply exceeds the demand or demand exceeds the supply. So when there is an imbalance, that's when market shifts to another phase that is called as discovery phase. And this is where price starts to advertise itself. Price started to moving in a directional move to find a new balance. And again, when market finds the right value, it again starts to balance over there. And we will see the market moving in sideways at that particular moment. The interplay between this demand and supply through these different stages, balance, imbalance, and discovery, is what drives the market. And my friend, this is what we can call it as market auction theory. If this is very, very clear to you, let's now move on to the next step, which is what exactly volume profile is all about and different types of volume profiles. Now, let's start from breaking down the concepts of volume profile. Basically, there are two different terms, volume and the profile. In the first place, volume in simple terms refers to the transaction between buyer and sellers. To be precise, number of transactions that happen between the buyers and sellers. For example, if a buyer purchases 5 contracts and seller sells 5 contracts, so basically trade is happened, and in this case, the volume is 5. This volume is recorded continuously with each transaction and is what we see in charts as a traditional volume indicator as a histogram at the lower level. And it shows what? It shows the total volume transactions that happened for that specific period. But now let's move on to understand the concept of profile, and this is where things get a little bit complex at the same time interesting. To get a clear understanding of profile, let's revisit the concepts of our high school times. I hope you still remember it. So basically it's called as standard deviation or the bell curve. So if you look at this bell curve, which shows how the data is spread out. If you take any particular data, any set of data, you can simply distribute that large number of data into these different sections with the center of the bell curve represents the mean. It's an average of the entire range, and that's the center point, and surrounding the mean we have the first standard deviation and the second and the third, so on and so forth. So this principle applied to various data sets. If you have any particular large number of that set of data, you can simply distribute that over this particular bell curve. For example, if you collect the height of people, the large number of data where most individuals, if you distribute that through this particular bell curve, most individuals' heights fall within the central range, which is considered as a normal height, while those outside this range can be seen as exceptionally tall or short. So that's the extreme that we are talking about. So in volume profile analysis, this is what we do. Volume profile, we aim to distribute volume data across price levels. Let's try to understand this with an example. Now on the y-axis we have the price, so this indicates the price, and on x-axis we have the time. For instance, let's say in a Nifty is presently trading at 20,000 rupees, and that is a price level where we got 5,000 volume. So in this case, we represent this with a horizontal histogram showing this volume. Now we know this is a 5,000. But if at 20,001, just 1 rupee above this particular price level, assume we got a volume of 10,000. And in this moment, we would show this on the chart with a histogram twice the size of the first one. Why? Because first one was 5,000 quantity, 5,000 volume, and second volume is 10,000. To represent this visually, the relative comparison between these two different levels, we have plotted a double the size of the initial histogram. If you continue this particular process through the end of each trading session, especially if you are like, for example, daily session, assume that throughout the day you distribute the volume in the same fashion, we compile a profile, and that looks something like this. So in simple short summary, volume profile is nothing but the distributed volume data over the individual price levels. And in this, there are a few key elements or components that we must be aware of. In that, first one, point of control. Basically, this is the price level where the highest volume of trading occurred during that particular session. So it's a focal point as it shows the most interest or most trading activity happened for any specific session. And then we have a high volume nodes. As the name implies, these are the area with significantly higher trading volume compared to the surrounding levels. In most of the cases, HVNs acts like magnets. So basically it attracts the prices. So basically HVN tried or attempt to keep the price between them due to the high trading activity. And now we have low volume nodes, it's opposite to HVNs. LVNs represents area with a lower trading volume relative to the surrounding price level. So basically there will not be much of a liquidity at these particular price levels, and price usually skips through these price levels. And the fourth one, most important one, fair value, or we can call it as a value area. It's usually derived from the auction market theory, as I explained in the beginning. So fair value refers to the price range where the bulk of trading volume occurs. Typically, it's around considered as 70%. Remember, first standard deviations, that's considered as 70% of the total volume occurs. This is an important area. Basically, this indicates where the market sees the most value. So if this is clear to you, let's now move on to understand how to plot the volume profile, because where to see this is also equally important. This is a premium indicator. You cannot directly use it on tradingview.in unless you have the premium account. But I'm going to show you a way where you can freely access this wonderful tool. Currently, we are exploring the Fire web platform. So here I'm using the Fire web platform because we can access this volume indicator freely. As I said, this is a premium indicator. You cannot use it directly in tradingview.in unless you have a premium account. But in Fire, it is nothing but the integrated tradingview.in platform only. This looks something like this. And in this, we can use this tool for completely free. If you don't have an account yet, you can use the link in the description to open one and gain the free access to this tool. Now the canvas looks something like this. In this, if I click on the indicator and type volume profile, you will notice there are two different volume profiles here. Volume profile fixed range, volume profile visible range. First, let's quickly understand what the visible range does. Essentially, we are going to utilize the help of volume profile fixed range, but now let's focus on visible range volume profile. When I click on that, it automatically draws the volume profile at the right y-axis, as you can see here. And follow my cursor in this particular point. If I simply zoom out, the volume profile is automatically getting adjusted according to the visible bars on the chart, and that's exactly the purpose of this volume profile is all about. Basically, it calculates the volume profile calculations for the visible bars that is visible on the chart. So if you zoom in, obviously the number of bars will be reduced. If you zoom out, number of bars will be increased because the range of the bars is increased on the chart. Now, if I double click on this volume profile, I can access the input that has been given to calculate this volume profile. As you can see here, the style and visibility are all about basically how you want to see the histograms, but I don't want to talk about it at the moment. Let's focus on input section, is where we need to understand certain things. This is very important. Basically, these settings are also going to remain the same for other type of profiles as well. So that's why I'm going to discuss about it in a detailed manner. So in this case, you can see, first let's understand rows layout. Rows is nothing but the histogram, the bar chart that you are seeing on the chart in the volume profile. That's nothing but the rows. But the question is how you want to be calculated it. So that basically this setting is all about. So listen to me carefully. There are two different methods to calculate it. Number of rows or tick per rows. If I just click on the number of rows, how many rows do you want to calculate here? For example, let's say 24 means that we will get 24 histograms data on the volume profile. If I increase the number, let's say assume 100, now the same range, but the range is divided by 100 different columns or basically the histogram. Alright, if I just increase this number, obviously we will get more histogram data. It will be visually very appealing to look at the data in a particular setting. So ideally, I would prefer to keep it at 100. If you are calculating the number of rows, in that particular case, we will keep it as 100. There is one more way to basically calculate this particular number. So it's called as tick per row. So what it actually does, in simple words, it calculates the histogram, size of the histogram based on the tick size of instrument. In most of the cases, it's around 0.05. So if I make it as 1, the moment I make it as 1, you will not be able to see any particular data because it is very minute. So let's make it 100 and see what happens. So if I make it 100, now you will be able to see the data, but again, it is very minute because 100 multiplied by 0.05. The 0.05 is nothing but the tick size of the instrument. So in this case, it's approximately around 5 points for each bar. So if I increase this number, let's say 500 in that case to 25 points, it will draw one histogram line. Similarly, it again increases. If you increase this number, obviously you will get less histograms. If you decrease this number, you will get more histograms. And more importantly, when you are selecting the tick per row data, obviously it varies from instrument to instrument. Now I'm plotting on the Bank Nifty, and Bank Nifty is presently trading at around 40,000 levels. I think for this around 500 row size makes sense. With that, you will be able to see the volume profile clearly. The ultimate goal of this particular setting is to see the volume profile clearly. It is nothing to do with our analysis. It is just to see volume profile comfortably. That's the basic purpose. You can adjust this according to the instruments that you are trading in. And now again, if I go to the setting of volume profile here, you can see in terms of the volume wise, we have three different type volumes. So we have up and down and we have delta. So I'm not going to use up and down and delta data here because this triggers certain biases, so I don't want to use them, and I'm directly going to use the total volume here. So these two settings are going to remain the same for both session wise profile and range wise profile. And one more thing, if I just open the setting here, style wise also you can change the settings. So basically it's about the preference, how you want to see the volume profile on the chart, and this could vary from person to person with respect to your preferences. You can change it. So you can change the colors, you can change the style, thickness, all those things. So you can just explore this once after the completion of this video. And one more thing, I forgot to mention this point. So there is something called as value area. That's what we were mentioning. So you can change this number according to your preference, but ideally I don't want to change. By default, it will be kept at 70%. I want to keep the same number as it is. I don't want to change anything here. So now follow my cursor. Once the setting is done, you can see here, this is where we have the value area high, and this is where we have the value area low. The blue highlighted area is what we can call it as a value area. So let's focus on one more volume profile. That's basically the session wise volume profile. This is an important point for us because based on this only we're going to make further analysis. It's called as volume profile fixed range. If I just click on it, you can see here it is asking you to set a point. There are two different points you need to set. It's nothing but the range that you want to select in the chart. So as I said, we have to select two different points here. Let's say the first point, you can see one dot here. Okay, so I'm clicking here, one dot, and the second point is the one. So the beauty of this particular indicator is that if I just select two data points, it will automatically calculate the volume profile for the selected range. Let's say this is a 15-minute chart and is where the day has begun. This is the starting of the day on 20th. All right, if I just drag in this point, in the beginning of this point at 9:15 candle, I'll be able to see a day's the entire day session volume profile as selected as the range. Again, if you want to plot the volume profile for the previous day, what you can do, so basically you can simply copy paste this particular tool and you can drag and drop. So as you can see here, the end point to the end of the candle session, so day's end, and the first point to the beginning of the session. So if you just do this, you'll be able to see the volume profile for that specific session. So it is nothing to do with the y-axis. X-axis has to be concentrated here. You just have to place these two pointers in x-axis in a proper manner. First starting candle, last starting candle. If you just connect that, you will be able to see the proper volume profile for the selected range. You could draw this range for hourly session. You could also do this for 2 hourly session or for a day session. Whatever the range you select, obviously the volume profile will be calculated for that specific range. Let's plot this for one more day. So for better understanding, copy and paste. Let's bring the first point to the 9:15 candle and let's bring the particular point to the last candle, and that plotted the volume profile for 16th Feb 2024. And the beauty of this selection tool is that if you want to see the last 5 days volume profile data, if you just simply drag this particular point to the first point where the last 5 days beginning candle is, you will be able to see last 5 days range instead of one range. So just having two different set of data points on an x-axis, we can easily plot this particular volume profile for any selected range. Well, now we understood where to plot and how to plot this particular indicator and different settings of it. I know it is very hard to digest in the beginning itself. If you have any particular questions, feel free to ask them in the comments. I'll be able to answer them through the comments. If not possible, I will try to make a separate video or maybe Q&A sessions. We can directly connect and discuss about it later. So if these points are clear to you, let's now move on to understand how to use this information or how to interpret this particular information on the chart. Now, analyzing this particular tool, we cannot directly depend on the volume profile itself. We also need to correlate it with a price data. This is very important point. Let's try to understand this with certain examples. For example, if you are plotting a volume profile for a daily session, you need to observe daily closing and you need to compare that to the value area of that particular session. Let's take an example. In this case, the market was balanced here, all right, and at the end of the day it closed above the value area, which indicates what? It's a clear imbalance. The market was stable and suddenly something happened because of that imbalance created in the market, and price is in search of the new sellers now, and it indicates what? It indicates that market is moving in the upward direction. This essentially means that buyers have become more aggressive in this case and eagerly looking for sell their positions at higher levels. Similarly, look at this example where the market was balanced within the value area in the beginning, but suddenly something happened because of that imbalance occur here. This is called as negative imbalance and market start to falling. At the end of the day, if you compare the value area and the closing price of the day, the sentiment is bearish because imbalance happened and closing happened below the value area. Then we have the third type of volume profile here. As you can see, everything is balanced. Essentially, if you compare the closing price to the value area of the day, the closing happened within the value area. It indicates what? There is a clear balance between demand and supply. Nothing happened, so it's a neutral sentiment. So essentially, there are three different portions here in a volume profile. Above value area is nothing but the positive imbalance. If market closing above the value area, it's a positive imbalance. If market closing below the value area, it indicates a negative imbalance. And if it is closing within the value area, then we are going to consider it as a neutral sentiment or a balanced market. But in terms of the patterns, we have the fourth type of pattern here. It's quite interesting and it's referred as an engulfing value, or basically outsider value and insider value. So insider value occurs when comparing to today's value to the previous day value. Earlier it was a one profile session, but here we're comparing two different profiles and deciding the sentiment. And in this case, as you can see here, today's value is within the previous day value. It's a insider value. And this indicates that there is no major change in the sentiment. It is what we can define as neutral sentiment. and we don't consider the closing price here, just the moment if you observe it's a insider value, it's a neutral sentiment. Similarly, there is a outsider pattern, outsider value, where today's value completely encompasses or basically completely engulfs the previous value session. As you can see here, even in this case, we are going to consider as neutral sentiment. Today's value completely engulfed the previous day value. So these are the basic patterns of volume profile. Addition to this, we have two different patterns as well. It's called as B shape and the P shape profiles. The P shape profile is characterized as a concentration of trading volume. Basically, volume will be accumulated at the top of the profile, at the top of the candle. This pattern forms when price starts with a low liquidity. There is not much of a liquidity. Price immediately sweeps to certain level and it starts to balance, and ultimately it finds value at the higher level of the price. When such pattern occurs, usually in a trending market, if it happens in the next session, the market opens within the value or below the P shape, below the value of the P shape, then it signals a potential reversal at the previous uptrend. This means that despite the upward momentum, despite the upward trend, if we observe P shape in the uptrend with a value at a higher level, it could indicate a buying reversal, and which may lead to potential fall of the prices below the value. The market again starts to accept above the P shape, then it is a clear continuation of the uptrend. Similarly, we have the B profile is essentially opposite to the P profile. So in this case, the value occurred at the lower level of candles, or basically lower level of the prices. This pattern indicates that if the market opens above the B-shaped value area next session or next day, there is a high chance the reversal of the selling of the last selling trend. Conversely, if the market continues to trend below the B-shaped profile, we can expect the same continuation of the downward direction. So ultimately, when B and P-shaped profile happens in the market or occurs in the market, we need additional context in order to take further decisions. Well, to gain a clearer understanding of the sentiment analysis, we will examine various patterns. Basically, I'm going to show you certain patterns, and your objective is to identify the sentiment indicated by these profiles, and detailed results and interpretations I will show in the subsequent slide or the next slide. In this case, let's look into this particular profile, which we will assume represents the previous day session, and pause for a moment, think about it. What do you expect for the next trading day based on this information? Think about it. So in this example, it's quite clear that the market closed within the value area and it indicates a neutral sentiment, and as a result, we observed a downward momentum from the previous day high. Don't worry about the buy and sell signals, and also I will be discussing in detail about them in the trading setup chapter. Now look at another example where the market again closed within the value here, and obviously it indicates what? A neutral sentiment, and this is the result of it. Moving on to the next day's sentiment. Think about it. Pause for a moment, and what do you think about the sentiment? Well, it's a positive sentiment. Why? Because the market closed above the value area, and as a result, we got the very good up move on the next day. And now let's look into this profile and pause for a moment. Think about the sentiment. Well, the sentiment is negative because the market closed below the value area, and as a result, it indicates a selling imbalance, and as a result, the subsequent day we got a very good downward momentum even from the point of control level. Now let's examine few dual profile examples here. If you are trading tomorrow, you will see today's profile like this. Okay, right one is the today's session and the left one is the previous day session. You are comparing two different volume profiles here. Now compare, pause for a moment and think about the sentiment. Well, it's a neutral sentiment because today's value is formed within the previous day value. It's an insider value and it suggests neutral sentiment. Now again, I'm telling, don't focus on buy and sell signals or strategies yet. So we will definitely cover them in detail in the upcoming or subsequent chapters. Let's focus on how to analyze the volume profile. Now again, we're comparing the two different profiles here. Blue highlighted is the value area. Again, I want to remind you. So in this case, just think about it. What's the sentiment you would expect for the next day? Today's value area completely engulfed the previous day's one, which is nothing but the outsider value, and it indicates a neutral sentiment, and this is the result of it. So this is how we define the sentiment for the next day using the today's volume profile information. If this is clear to you, let's now move on to the most exciting part of this tutorial, which is how to trade using this information. See, always understand when it comes to forming a strategies, we need to have a clarity on three different aspects. So I want to call it as a TLE framework. So in which sentiment the market is presently trading in. That's what we have done so far. And second is all about identifying key levels. So we cannot randomly get into a trade whenever we want. So we need to wait for price to reach to certain level to react or respond to those price levels. We need a confirmation from the price to get in or get out of the trades. This is the second step. And third step is where we get the entry and exit. So this is a TLE framework. Right now, before we understand entry and exits, let's try to understand easily how we can identify key support and resistance levels using the help of volume profile. So since we are looking into very short-term trading opportunities, looking at the past week's level, so just 5 to 7 days of data itself is more than enough for us to look for any particular key levels. And once again, if we identify these levels, this also we can use it as a target levels for intraday trading. Let's quickly figure out how to identify key support and resistance using the volume profile concept. To find these key levels, I'll be using here. We are using the help of volume profile visible range. Remember the first one that we have used. So once you activate it, just go to the indicator and select it. You can see this visible range volume profile on the right y-axis chart. Just zoom out a bit, basically just visible for 5 to 7 trading days. And next, draw the horizontal lines wherever you see the high volume nodes. For example, at this level we have a HVN, and similarly point of control, this is where we have the point of control. Again, we can draw one particular horizontal line. If you continue to do this process, wherever you see the high volume nodes, you just plot the horizontal lines, you'll be able to identify the key levels using the volume profile. And one of the important points I want to mention here, if you are trading intraday, previous day high and previous day low are going to play the critical role. So hence automatically we are going to consider those range. And once after the completion of the first hour is what we can call it as IB or initial balance technically. Once after completion of the first hour, you can simply identify the first 1 hour high and low also to monitor for the intraday trades. So previous day high, previous day low, IB range high, IB range low, and the high volume node areas are going to be the critical levels for us to monitor for intraday trading. If this is clear to you, let's now move on to understand the most exciting part, how to get in and get out of the trades. Well, when it comes to the trade setups, there are many trading setups one can form using this wonderful information. If you just understand the base theory that we have discussed so far, you can develop so many strategies using this tool. But I'm going to discuss about 2 different powerful trading setups now, and using them, I'm also going to show you the back-tested results. So basically, last videos, many people suggested me to show some real life examples. So that's why I'm giving more examples now for a better context. First, let's try to understand what the setups are. First setup, value area pullback. Well, this strategy comes into play when the market is in imbalance state. Either the market has to be trending. So that's the that's the situation where we are going to deploy this strategy. Trust me, this can give you a good risk to reward trading setups. For example, let's look into this particular chart. Initially, we determine the previous day's sentiment as in this case, it is negative because price closed below the value. In such scenarios, we wait for price to pull back to the previous day's value area, or mainly point of control, and the below the point of control area, value area, is the zone where we look for the shorting opportunities. As shown here, after identifying the previous day's value, we spot the swing low formation, and this is where we saw the breakout of this particular swing low. That's the trigger for short trade. So first thing is sentiment was bearish, and we got the pullback or rejection from the point of control of previous day, and it formed the swing low, and breakout of the swing low could be the short trade entry. And alternatively, this is one of the important points, you could also consider 15-minute chart here. If you are person or a conservative trader like me, you could consider 15-minute chart. When in 15-minute candlestick patterns such as harami or engulfing pattern or hammer pattern, hanging man pattern occurs, the reversal patterns, you can get into a trade. Let's understand them in a different example. So regarding exits, again, I want to talk about this. If you want to exit a trade, I personally prefer trailing stop loss using average true range. I've already posted a video on explaining how to use ATR for keeping stop losses. If you haven't watched it, you can watch this. I will give you the link in the end of the video. We can also plan the exit based on our key levels, the direct target exit. In this case, the target for our short trade was determined by HVN level. So you can see here, this is the level where we supposed to exit if you are exiting by target exit. So it is a clear 1:2 trades in terms of the risk to reward. Let's try to examine another example here. So in this case, market shows a positive imbalance and it is trending in an upward momentum. Basically, market closed above the value area and hence we are deciding the sentiment as positive. Here, market forms a positive engulfing pattern on the 5-minute chart itself, and that could be our entry trigger for a long trade. So main important point is that this reversal pattern is occurring at the pullback to the previous day value. That's the reason why we call it as a value area pullback setup. Alternatively, if you use the 15-minute chart here, so as a trigger chart itself, in this particular case, it's a classic positive hammer pattern that happened from the previous day value area, and above that particular candle we can get into a long trade because market is in a right value. As I said, typically this particular setup gives us a good risk to reward because one thing is that we are following the trend, and along with the trend we are also looking for the right opportunity. When market pullbacks, we are exactly trying to enter at the swing low formation. Again, market continuing its direction, but we are getting into a trade at a very desirable place. Then the second type of setup is a trap system. It's my most favorite. We deploy this when the market is in neutral sentiment. Imagine we are analyzing the market sentiment from the previous session. Here in this case, it was neutral because market closed within the value. That's why we're defining it as neutral. When the sentiment is neutral, this is important. When we define the sentiment as neutral, our strategy is to buy the low, sell the high on tomorrow. We typically look for opportunities for the previous day highs and previous day low rejections, or first 1 hour IB range low, IB range high rejection. So that's the areas or locations where we monitor the price for rejections to get into a mean reversion or kind of a buy low sell high setups. Let's look into few setups. So to illustrate this, let's consider this scenario where after the first hour, the market on the following days falls back to the previous day's value. At this point, we notice a bullish harami pattern forming in 15-minute chart, and this pattern signals a clear entry, long entry, and we enter at the price breaking above the high of this specific pattern or the candle, and it was clear 1:2 trade here. Let's try to understand one more example. In this particular case, after analyzing the market sentiment from previous day, which was neutral again because the market closed within the value, the market opened with a gap on the next day. This situation offers a perfect chance for us to look for shorting opportunities at the previous day's high because our strategy is to sell the high, buy the low. As observed here, once the first hour was completed and after the formation of the initial balance, we noticed a bearish hammer, which could also be seen as, in some cases we can call it as a hanging man, but ultimately the main thing is that there is a selling wick in this particular candle which shows the rejection at the higher end. And following this, with the appearance of the red candle, it becomes clear that shorting opportunities below the red candle is a good move. And usually in this particular case, we try to target the previous day low. But if you are a bit aggressive, if you want to exit the trade early, you could also consider the target as previous day's point of control. Usually market retrace back to that particular level in most of the cases. Let's go through some real world examples, few more examples. So now you understood two different strategies, how to deploy it on a real time charts by backtesting. We're going to understand now. This is very interesting. Try to observe it every single time. If you are getting confused, pause and again listen back to me, and again you can pause and see the information. That's why I'm giving these charts example. Try to listen to this information very carefully. So basically what I'm going to do is I'm going to analyze, let's say this particular profile I'm going to analyze, and next day we're going to see how we would have traded this particular market based on the volume profile information. All right, so I've already explained two different setups using this, and I'm going to show that in the real-time market. So let's straight away get into the subject. In this case, we are analyzing the markets here. Market closed at somewhere around 46,601, and it is basically within the value. This blue highlighted area is the value, and market closed here, which shows what? It's a neutral sentiment. So obviously by just the price, by looking at the price, we would have considered this as a selling sentiment, but since we are considering the volume profile here, the price closed within the value, hence we are considering the neutral sentiment. So what is the possibility? How can we plan a trade for the next day based on the present information? So it's very simple, right? So this is where we have the point of control, right? Market price wise, it is trending in the downward direction. However, sentiment is neutral. There are two possibilities. Suppose, let's say if market opens gap down tomorrow, all right, gap down tomorrow. If there is no selling presence, and immediately if we get any positive candles in the first 1 hour itself, we can even look for buying opportunities above those candles by targeting the point of control. Point of control should be the target in this place. Basically, in such cases, we look for buy low and sell high strategies or the trap system. That's exactly what I'm trying to explain here, right? This is one of the possibilities. Or suppose, let's say market opens gap up, all right? This is where we have the HVNs, right? This is where we have the HVNs. Suppose market opens somewhere around here, and if it attracts any kind of a selling presence here, and if we get any particular candlestick charts which shows a negative momentum, then we can even short by immediately targeting the point of control. This is kind of a setting. Buy low sell high setup is what we can deploy for the next day. So if this is clear to you, let's now move on to understand what happened on the next day. All right, so let me enable the highlight. So you can follow my cursor whenever I show certain information on the chart. So you can just follow my cursor. It will be easier for you to understand. Let's see what happened on the first candle. First candle, always remember, absolutely plays the critical role in the intraday trading. So in this case, let's say this is a 15-minute chart and market opened gap down and there was a immediate short move. All right, always remember, don't get into a trade in the opening itself. It will be very trappy kind of a situation. In most of the cases, market traps the players. All right, so in this case, market tried to move downwards, but again it found the buyers at the below level, smart buyers, and obviously market closed at the higher level. So it is clear rejection of the selling momentum. That means what? The sellers who were in search of the buyers found the buyers here, and buyers entered into the market because they found value in the present price. So if this is clear to you, let's now understand. Based on this information, immediately we can place our long trade order. So basically long order above 46,367, which is high of this particular candle, and we can keep our stop loss to the low of this candle, or you can simply follow the ATR based trailing, which I explained in the past video. All right, so any particular method which can help you to place the stop loss. That's the basic idea. Once this is done, let's see what happened. All right, well, first 1 hour is completed. Now 15-minute 4 candles are completed. All right, now what we can do, the high got broken here. All right, high got broken here, we got the swing low. All right, this red candle low is where we can trail our stop loss now, 46,105. And let's see what happens. Market is working in our favor. This high also got broken, and let's see what happens. Our target is point of control here in this case. Well, we got a breakout of the last swing high, and by making the swing low at 46,420, so we can keep our stop loss just below this particular red candle, and we can simply ride the trend. Our target is point of control. Let's see what happened. Oh yeah, in this case market reversed and hit our stop loss. It's absolutely fine because at least we exited this trade with a minute profit. Market didn't even tested the point of control, previous day point of control. That's absolutely fine. Market, trading is all about a probability. Let's try to understand few other setups to how overall things have performed. So all in all, we exited with a cost to cost, almost a minute profit in this particular trade. We could also have played the short trade here if the market get into this particular level, point of control, and if it get any rejections here, we could have shorted the market, but that didn't happen. Obviously sellers entered at the earlier price itself, and market closed again, retraced back to the same point of control of the day. All right, let's see what happens for the next day. All right, so just a moment. Yeah, in this case, again, let's analyze the sentiment. Market closed within the value of today, so which indicates what? A neutral sentiment. Again, the same situation. Sellers are sitting here somewhere at this level, 47,980 to this level. We can look for the shorting opportunities, or probably we can also look for the shorting opportunities at 46,724 level, buying opportunities at the today's low, which is at 45,970 level. Let's see what happens on the opening candle. Market opened within the value, all right, or we can say within the range of today's range, and we are not going to do anything. We are waiting for price to reach certain desirable level. At least PDH is a desirable level in this case. All right, so here let's see what happens. The first 1 hour is completed. All right, 1 hour is completed, and now market is approaching near previous day high. So this is where the 1 hour completes and market approaches to the IB high. We are not going to place a buy order here. That is the mistake most of the retailers do. So basically when market approaches to this level, this is a desirable level for short sellers. All right. So here we are getting kind of a signal for shorting opportunity because we are seeing the wick at the previous day high, and also it is a IB high candle. So here is where most of the buyers are getting trapped. Let's say I want further confirmation because it's still a green candle. All right, so in this case we got a red candle. We can either enter, if you are an aggressive trader, you can enter to the low of this particular candle by keeping your stop loss just above the previous day high, which is at somewhere around 46,737. And also if you are conservative like me, so you could place your stop loss. Yeah, you can enter to the market to the low of this particular red candle. All right, what would be your target? Just think about it. So it's a point of control, right? So this is where the point of control we have, and this is where the PDL. So immediate target would be 46,190, and the main target would be 45,970, which was PDL, previous day low. Let's see what happened in the next candle itself. We got the huge candle, huge downward candle. And usually, see, this is how I manage the trade. So for example, this is where the low got triggered, and this is where we have formed a swing high. We can simply trail our stop loss from this point to this point immediately, so which helps us to secure the profits. Let's see what happens next. Again, same thing, right? So it triggered our target, the first target, point of control. How beautifully it has triggered. And we can keep our stop loss just above this particular candle now, and we can leave the trade so as it is, or we can simply close some of our positions. If you are a discretion trader, you can close some of your positions here, and you can simply target the previous day high, and that's exactly what triggered. So in most of the cases, what would have happened if we if we didn't analyze this? Most of the people would have bought the market at this particular level. That's the mistake we do. Since the sentiment was neutral, we were looking for shorting opportunities at the higher level. So sellers found it attractive and they entered, boom. So that's it. Market went in the favor of buyers. So basically it was searching for a new buyers. Again, this is the price level where we have the buyers sitting when the sentiment is neutral. So see, that's exactly what we are witnessing now. So market again, we got a buying momentum when immediately it approached to the buying zone, right? This is very important concept and absolutely a critical concept to understand. In this case, as you can see, approximately we got around 1:3 to 1:5 trade easily in this case. Even if you would have targeted the point of control, it would be easily a 1:2, 1:3 trade in this particular case. Let's try to analyze further movement. So basically that's how I wanted to keep this video on. So in this case, again, market closed within the value. All right, market closed within the value indicates what? Neutral sentiment. Similarly, if market approaches to this level, we are going to look for the shorting opportunities. This is where the buying opportunity lies. In between, simply don't do anything, right? So without even, if you're not trading, that itself is a trading. You are going to save the money in that particular case. Let's see what happens on the next day. Market opens within the value of previous day, which indicates a neutral sentiment again continuing. And in this case, either we will wait for market to form IB or market to approach to the buyer zone. So let's see, in this case, market's IB levels are completed. So fourth candle completed. And if we get any buying opportunities below the IB low, we are going to get into a trade. So let's see what happens. It was still a neutral trade. Now market approach to the point of control, and here is where we should be very cautious. So let's see what happens. Immediately we got a very good up move, but unfortunately, if you are trading in 15-minute chart, it would not have been a great trade because the risk level is very high compared to the reward that you are probably expecting here. It's not even 1:1. Hence it is better to avoid the trade. If you are trading in a 5-minute chart, you would have captured this particular movement. Let's see if I can add that. Just a moment. Double layout, and it's on which so this is the beauty of the volume profile. So the moment it approached the point of control, we have seen this kind of a reversal, and that's exactly what we were looking for. All right, so let's see on a 20th Jan, right? So this is when, yeah, in 5-minute candle we would have probably captured this particular move, but personally I don't trade 5-minute chart, so it will be very choppy kind of a movement. It's very simple, right? So if you are using a 5-minute or lesser the time frame, more the signals and higher the time frame, better the signals. For me, 15 minutes suits the best. For you, if it is 5 minutes, then you can also look for trade in 5 minutes. So as you can see here, market approach to the previous point of control. This is where the point of control was, and the moment it is approaching here, buyers were entering in each candle. As you can see here, that it was very clear with a buying wick in every single candle. All right, so here is where we got the kind of a reversal sign. You could have traded this particular move by entering into the long trade above the 5-minute candle here, the confirmation of the green candle, and easily you would have targeted the previous day high volume node, which is at somewhere, the high volume node is somewhere around 46,600. So by the end of the day, this is what happened. Let's look into the example of 15 minute itself. And yeah, let's give me a moment. Yeah, so in this case, see what happened here is that market again closed within the value, almost edge of the value. In this case, see, the possibility is very clear, right? In this case, I want market to sustain either above this particular range. All right, so that's where the sellers are sitting. If it is accepting above this, we can expect further upward momentum. That's exactly what the scenario is. In this case, usually what I do is basically I plot a rectangle, so which indicates a range. All right, so this is the range which we are concerned about. Basically, as long as market sustains within this range, we can simply look for buying opportunities at the range low, selling opportunities at the range high. Let's see what happened on the next day. All right, so see, in this case, market closed above this particular value. However, the sentiment wise, if you just observe this particular candle, this is a very important information. So at this moment, we got a selling presence here. How can I say that? By the wick of this particular candle. If the buyers were so strong, they would have closed the price at the near to the high of this particular candle, but that didn't happen. Even there is a presence of selling. I'm cautious. I'm not buying here, even though if it is breaking the range, I'm not buying here. All right, so immediately the price closed within the range. That confirms me that again sellers are in the game. So I can immediately look for a shorting opportunities just below this candle, the red candle, and immediately target what? Target either this point of control 46,176, or maybe this will be the first target. Okay, so let me revise that. 46,500 is the first target. Second target is 46,181. 45,973 is the third target, and anything below that is a bonus. Let's see what happens. So first target was already triggered. The moment it happens, I don't want to risk more, so I can simply trial my stop loss just above this particular candle's high, and let's see what happens. Again, we got a very good down movement, and in fact, the next candle itself, the target was triggered. And now I become cautious because I'm still in a shorting trade. All right, I don't want to close the trade, but I want to simply trial candle by candle now onwards, because my most of the targets for the day is already triggered. So let's see what happens. So sorry, in this case, the market approached to the buyer's zone and we got a buying wick, which is not a good sign for us. In that case, we can simply trial our stop loss to the nearest swing high, which is available at 46,167. So if market breaks this level, I will move the stop loss to the high of this particular candle. Let's see what happens. So that's what happened. Market breaks decisively the low of the last range low. Let me extend the range. It breaks the range low decisively. Now look at this. This was a breakout candle at the higher level. So we got a wicks here in the candle that indicates a false break. So buyers who entered here are getting trapped, and that got confirmed in the second candle itself. But in this case, market closed near to the low. So this is how the conviction should be. If it is a strong downward momentum, the conviction should look something like this. All right. So when this happens, I can simply trial my stop loss just above this candle to candle trailing. Anyway, anything below this particular level is a bonus for you. All right. So let's look into this. What happened? I think it was a huge trend on that day. All right. Well, now something happened here, right? So in this case, we got a green candle. Until this, there was not even a single green candle in 15-minute chart. When this happens, I can simply, candle by candle trigger was somewhere triggered at 45,672, and I'm out of the trade now. And I'm not going to do anything unless market again reaches to the range low. This is how the polarity support and resistance works. So earlier this was a support, but now the same level can act as a resistance, the basic theory of price action. All right, let's see what happens, because anyway we are done with the first half and with a good profit, so it's better to take off if you are a discretion trader. But in this case, even market continued to move in the same direction, the bearish direction. This is an example of a clear breakout. How many people ask me, Nataraj, how do you differentiate the difference between the real breakout and the false breakout? I have already explained. This is a trap. This is how the false break looks like. This is how the real breakout looks like. This candle is the real breakout, and when the real breakout happens, you can see how the market moves in the breakout direction. Now we have got very good downward momentum. So basically, if we just look at the price, we would have assumed it as good selling trend. However, if you look at the volume profile, the scenario is completely different. First thing is that it closed within the value, which indicates a neutral sentiment. When the sentiment is neutral in volume profile, again we are going to deploy the buy low sell high strategy for tomorrow's session. All right. And one more thing I want you to notice here, this is an additional bonus tip I am giving here. So in this case, this is a kind of a B-shape profile. All right, so this is where we got most of the accumulation, even though it was a good downward momentum. So sellers found the buyers here and they started to accumulate their positions. That's what it indicates. It doesn't mean the market will reverse or immediately reverse on tomorrow's market, but if market accepts anything, if these sellers are so strong, if they accumulated this much of quantity at the lower level, they should continue this trend on even tomorrow also. If that is not happening, that is my concern. If market is not accepting below this particular level on tomorrow, I'm not going to do anything. So it's basically the trap of the sellers, the last sellers that who entered here, and market again can reverse, or basically at least it can mean reverse to the previous high volume node, somewhere the high volume node here and high volume node here, high volume node here. All right, this is how the ideology for the next day is, and let's see what happens in the real world. All right, but by any chance, if I get any false break or kind of selling rejection at the opening itself at PDL, I'm going to buy the market tomorrow. Let's see what happens. We got the buying rejection. All right, we got the buying rejection, and simply we can get into a trade above 45,345, the high of the candle, by keeping the stop loss at the low of the candle, or basically you can use any particular stop loss method that you personally follow. And let's see what happens. Market moved in our favor. It's a very good up move, and see, the thing is, it already it already approached to the 45,685 level, which is high volume nodes. High volume nodes are very important, especially when this kind of big move happens. When there is a rejection, right, when there is a kind of a pullback, obviously we should be very cautious to trade against this particular trend. We are trading now against the trend, right? So in this case, when the market approaches to 45,677, we can simply start aggressive trailing candle by candle, or maybe average of the candle. So for example, in this case, we can, previous candles average is somewhere around 45,650, and that's where we can trial our stop loss. So it makes sense for us to safeguard our profits. So see, this is a classic example. This is how basically I want to trial my stop loss. All right, so when market breaks this, after this red candle, market breaks the high of the red candle again, that leaves us the swing low at the red candle itself. So we can simply closely trail our stop loss to the low, and we can simply target the 46,080 to 100 level. That's where we have the high volume nodes. Follow my cursor. So we got the reversal kind of a sign here. All right, we could even look for the shorting opportunity, but in this case I don't want to do that because the earlier rejection, right? So this is one more tip I want to give. So when the earlier rejection happens at the PDL, the possibility of market reversing completely to the day's low is quite low. All right, so in this case I can simply exit my long trade here. So that's what happened. The long trade was exited. Now again, if market approaches to the previous day low point of control, instead of selling, I would like to look for a long trade opportunities, but in most of the cases, one or max to max two trades. If there is any strong kind of signal, I go for a second trade. Most of the cases I exit my trades with one single trade. All right, so again, it's a buying opportunity. Buying zone is where we are presently. Let's see what happens with the market. So we got again a buyers entered at the lower level, and market went into upward direction. All right, So earlier, as for the sentiment, it was neutral, and when that happens, we look for buy low, sell high strategies. So in this case, even if you had missed the initial opportunities, you could have entered into the markets here, because here is where we are seeing a bullish engulfing candle, and here also we got the bullish engulfing. Maybe you would have traded above this. If you are kind of a scalper, so obviously it will definitely help you, because it will be very clear for you that anything below this particular level, so if market breaks this particular level, we are not going to be in a long trade. Until that market sustains above this level, we are going to look for a long opportunities, and that's what the thing is. All right, well, that's it for today's tutorial. I know it was a lot of information in a short amount of time. I strongly recommend you to watch this video again, and once again, don't rush into trading. Just you got the information, you don't have to rush to the trading tomorrow. Take your time and comfortably understand what's happening with the volume profile and how to use this information. Try it with some few examples. Remember, each person, this is very important, each person has their own personality, and the strategies you develop must align with that personality. And it is not necessary for everyone to trade the trap or maybe a breakout strategies and everything. It is crucial to find what suits you the best, and you can only do that. Nobody can help you with that. You need to trial and test with few strategies and understand what works best, what not works with you, and you have to stick with that for a longer time. And in this tutorial, I have provided several methods, so you can shortlist a few and try them with small positions or maybe with a paper trading. Then you can decide on your style of trading. And I strongly believe that today's video was helpful. It took a lot of time for me to create this particular tutorial, and I really appreciate your support. To support me, please like this video and share this with your known ones. They can too gain the clarity on how to approach the markets with the right mindset and right tools. That's all from my end. Thank you so much for watching this video and giving your wonderful time, and I really appreciate that. Thank you so much once again. See you in the next video. Until then, take care. Bye bye and Jai Hind.